Hello traders, this is MacBillion. Today is September 8, 2015, and let's talk about the market. Let's start with the S&P mini futures. As you can see here, for a whole year we were trading between 2030 to 201.20. We were moving sideways in a tight range for almost 7-8 months. Now we break down here on fears about China, but now we are inside a new range, and I'm going to show you that range. I'm going to go to the 1 hour chart, and this is the range we are right now inside this symmetrical triangle. Now today we got a breakout right here with acceptable volume. It was not a great volume, but it's acceptable volume. But I'm watching this Fibonacci number right here, the 1975. Why I'm watching that one? When you get a breakout and the breakout is very close to a resistance Fibonacci, you have to respect that breakout. You don't want to enter right here and then it goes to the Fibonacci resistance and it start going down, because that will be a fake out. So you want to wait until it break out that Fibonacci line that is very near to the breakout. And we can clearly see here in this move, we went almost close to that Fibonacci and we failed. So we know that Fibonacci is going to be strong. Also right here we saw a nice battle right here. So it also give us a clue that we have to respect this Fibonacci line. Now if we break out that line and start going up, there is not resistance here. It will go straight up to the 2030 again, and then from there we need to see if that is gonna enter the major trend again that was for almost 8 months since the beginning of the year. Now let's talk about the spider. The spider is similar to this one. As you can see here, it's inside this trading range. Also, let me zoom this out. You see this range right there? This one doesn't look like a breakout, but it also has the 197.41 Fibonacci that I'm watching also. So for me, it's still inside the range. So there's 3 things that you need to think about it. When you trading, you either long, short, or cash. And there is nothing wrong on being on cash. I know you want to put that money to work. We all want to put that money to work. But let me tell you something. The majority of the traders, they do some good trades and then they lose those money inside a range like this, because they start putting money here and there, and making the brokers rich. You know, paying commissions because they're not disciplined enough to wait for a breakout. So you have to wait for a breakout because you want to trade high probability. You don't want to enter inside the breakout because it can go either way. Another thing that I'm looking, and I'm going to be looking, is volume. It's very important to look at volume. The volume today in the spider was only 116 millions. It usually trades around 150 million. So it was a low volume, but we saw that it's testing the 197.41 and it finished 2 cents about that level. So let's see if tomorrow can confirm the breakout right here, the triangle and the 197.41. If it confirms, I'm gonna be watching volume, and I wanted to see something in the DMI. I wanted to see that the directionals move at least to 30, because right now the minus directional is at 41 and the plus direction is at 20. Remember that only big money moves the directionals. So that is going to give me a clue, a good volume and a move of the directional to the center of 30 for a crossover. That will give me a clue that this move is going to be a good move. I think the market is waiting for catalyst, probably tomorrow Apple, because the Apple event is going to give us a catalyst that if it's really good, the market is going to shear and it's going to break out recently and start going up from here, and we will enter long, because if I see a breakout with good volume and everything, I will enter long. I'm not a bull or a bear. I always tell you that because I wanted to make money and I want you to make money and trade this market. I don't care what I think this market will be. I don't care what you think or whoever thinks where the market should be. You know, many people think that the market should be down, should be here 180. The spider should be at 170 because the economy this and China and this and whatever. I don't care about that. What I care is about the chart. If the chart give me all the clues that I'm looking and I like it, I will enter long. If the chart doesn't give me anything and start going down and break down, I will go short no matter what. So just keep in mind that. And now let's talk about DIA. Or let's talk about Apple. You see the resistance here? This is what you need to be looking tomorrow. This resistance, very easy. Put it on your chart. If you break out that resistance, then 115 is the key number. Because that number was resistant at the end of August. It almost went there to 115 and it failed. It went down hard. So tomorrow event, you have to put this one in your chart. This line right here. If you break out and you want to do some nice day trades, you can use this one and you can use the key number 115. Very easy. I'll be looking to see if I can do some intradays on Apple tomorrow. However, I don't like to share those because that will be very fast sometimes, because you know when they start the event they start talking this and this and that, and they approximately start going up. It might break out 115, test the 50 moving average and fail. So you have to be very fast when you're doing day trades. You have to put your tight stops, and you that doesn't give me time to send you an alert. But follow this chart, follow the 115. Put your chart in 7 minutes, and that's what you're gonna see. You're gonna see tomorrow something like this tomorrow. So you're gonna be trading tomorrow in opens like this. So if you break out right here and start moving to 115, and you can take profits. If you break out here and it goes to 115, take profits and put a tight stop. And if you break out 115, this thing is gonna continue to 120 easily. So that could be a nice trade tomorrow if you want to watch it. Now let's talk about the iShares Russell. The iShares Russell has a similar chart to the S&P, but it didn't break down to October's 2014 lows like the spider did. It bounced almost from the 108 Fibonacci, and now it's testing the 20 simple moving average. You see, it tests the simple moving average right here. It fell. Right here back in the beginning of August, it fell. So this is an important moving average you need to watch, because it fell many times. It goes there. So if it goes to the 20 simple moving average in a daily chart, which is 116, and it failed, guess what? This thing is gonna go down really nice, and I'll be looking to enter short. And DMI will be our friend right here because it's bearish and strong. So that's another thing that I'm watching, the DMI, because I don't want to go against the DMI. So I have mixed signals right here, but a fail of the 20 and the iShares Russell will give me bearish, and this thing is gonna test the 107, 108 Fibonacci support. So keep an eye on that one. Now let's talk about the last one. Let me show you the VIX. The VIX right here, I have been telling you about the 25 level. Well, it finished 10 cents below the 25 levels. So I need to see tomorrow if it's gonna break down the lowest of today, which was on 24.13. I need to see that number below today's low. If it goes to today's low, I think it's gonna go to 21, which is an important Fibonacci support. And the VIX, since you can see how strong is this support, because it was resistant back in June 2013, back in October 2013, February 2014. It was support and resistant for many times. So be careful right here. So that's another thing that I'm following. If it confirms today's low below today's low, that will give me another clue that the market is gonna be strong and it's gonna keep going up from here. If it's fail right here and start moving up about 25, that's gonna give me another probability that I have to enter short and short this market for another lower lows. Traders, this is everything for today. Trade on.